If you're one of the 38-year-olds living in your parents' basement because it now takes more of a monthly paycheck to own a house than at any time in recorded history, it's not so easy to be happy with the way things are going.
Today, folks, as a 30-year-old bouncing between multiple parents' basements, as a self-proclaimed clown on the financial YouTube guru space, today I want to talk about why the markets are pure fugazi. We're going to be diving into these high-flying tech stocks that are starting to take us back to the moon, and if that is likely to continue. What's going on with my $443,000 dividend stock portfolio that I have been gradually selling off to some extent? We'll talk about why I plan on kind of just balancing this out a little bit with the hopes of buying real estate sometime in the next 8 to 12 months. Well, I don't know exactly 8 to 12. It'll be somewhere within that time frame, and talking about why this is so hard, but why I think this is the opportunity to do so. And as a millennial, if that is a conversation you damn well appreciate, hit that like button, because there's nothing like honesty and true transparency. But oh yeah, we can't help but talk about the other clowns on the internet too, like Meet Kevin, who is settling his FTX lawsuit with a letter of intent to finalize that up and pay these people out, which I have some opinions about. Not ones that you probably think, because I have an adverse opinion to that in a way that you might be surprised. But getting into it, folks, taking a look at the market, yes, the hopium rally has returned. The euphoria, the beautiful ecstasy of great returns is back. And we're all kind of benefiting from this, and I'm very grateful that, you know, things are starting to balance out a little bit. As mentioned, I really think that October was the bottom of the S&P 500. I'll explain why I think it's the bottom, but why I think we're starting to get overbought here. A lot of people were saying, oh, we were oversold, it was buying opportunity of a lifetime, and I'm going to tell you why that it wasn't oversold, why it's rallying right now. Because outside of individual stocks, as somebody that's buying indices, paying attention to the broader market, it's just easier that way. I made a big bold bet last year. I said, hey, I don't want to make a bet on individual companies when things are starting to degrade. I don't know who's going to come out on the other side of this, so I just want to buy all of them. Let me buy the basket. Let's wait, see what happens and comes out on the other end. And I don't mind giving up those absurd gains that we're starting to see now from companies like Apple. You know, and what I want to show you here with these big tech companies, because it's not the whole market driving back, and I think these bottom half of stocks that haven't been driving back are going to come back, because bank stocks are undervalued. Foreign stocks, there's a lot of companies on the lower half they're just undervalued. And the only thing rallying is like 5 or 10 tech stocks, and they're the ones bringing the whole market up, which again, why I'm glad I bought the broader indice. But nonetheless, you take a look at Apple here. For the first time in a while here, we're starting to see negative revenue growth rates. You know, Microsoft here, same deal. We went into negative growth rates. And this is what happens going into an economic downturn. People are just not going to spend as much money. They're going to be putting it toward the real estate, higher interest rate environment. They're not buying like, you know, $5,000 MacBooks anymore. And that's what we're seeing here. So why are these stocks driving up so much when for the first time, I mean, look at Google. Google's actually has some good revenue growth still, but it's down into the single percentage points. I mean, 1-2%. It's like, it's very rare in its history that revenue has dropped off this much. Meta is a prime example here. Look at Meta. So the whole idea of the market is that it's based off future projected cash flow. You'll hear that across so many YouTubers. Like, that's why Tesla can trade at such absurd premiums, because people think the future, you know, speculatingly, that's a word, thinking that self-driving can project out major returns and cash flow, right, and revenue growth. So what's the problem here? Well, when Meta went into negative growth rates for the first time on its revenue, and it's pretty much history for the last 10 or 20 years, and now we're seeing like 4%, you know, we're starting to see this continual quarter over quarter. People project that out. They're like, oh my God, like they're no longer growing, they're dying. I'm not going to be paying a 30 times multiple for a company like this where there's no growth. So then all of a sudden, you know, Meta starts to sell off, and then people keep projecting it out, thinking it's going to get worse and worse, and then it gets oversold. That's how a company gets oversold, by the speculation of how far it's going to drop into the future. And then what happens? Well, the company's like, hey, we can't let this happen, so we're going to trim the fat. We're going to lay off a bunch of employees that are unneeded. We're going to cut back expenses. We're going to make the bottom line earnings look better, and then they're going to balance everything out a bit. And then sure enough, we see like a good little quarter of a bump, a little bit of revenue growth returning. Oh my God, the bottom line looks way better than it did, than we were projecting it to be. And then all of a sudden we rechange our projection into the future, and then all of a sudden the stock flies up. But then people get too bullish. Then they start over exaggerating that future, and then we get into this new bull rally that becomes a little bit, you know, euphoric, and then it'll start selling off again. It's like this, it's a cyclical cycle, right? It's very entertaining that we're not able to make more money off this. I feel like I should be betting way more money when you kind of get used to these cycles, right? Look at Amazon. For the first time in Amazon's history, look at how much the revenue growth has slowed down. So my thing is you can't live in an environment at 30 times multiples where you're only seeing single digit revenue growth. That inevitably, if that does not pick back up, this market's not going to keep rallying on tech stocks. However, what I'm predicting is that tech stocks will start to sell off and it'll balance back out to the bottom stocks that people just don't like right now. Your banks, there's just a lot of energy companies. There's a lot of other aspects of the market that are starting to get undervalued. So all the money's flooding into tech. Eventually, it'll start flooding back out and into these things, like we saw with consumer staples, right? All the money came out of tech, went into consumer staples. It's just this constant rotation. The money never just disappears or goes away. It just rotates. It's why it's so important to own the broader market when you just don't know what's going on in the economic cycles, right? You got to kind of deleverage your risk. I think is probably the more appropriate thing. It's what I've taken on. And let's talk about the portfolio worth $443,000 today. It's recovered by about $5,000. I'm over $100,000 in cash now. I took a little bit of a loss on my VDY by like maybe under a couple $1,000, and I doubt it just because of the dividend income I've received over the last year. But why am I doing this? Why would I sell stocks in a moment where I still think stocks have potential and I think the market's bottom? Well, I want to buy real estate, and I think there's an opportunity of a lifetime presenting itself here. I really think they're going to raise interest rates again in Canada because we blaggard the U.S. markets. Our inflation is picking up again, yet we have really incredible GDP growth. Our GDP is well above the bank's expectations. We still have really good jobs, and that makes the Bank of Canada say, hey, we can't have inflation this high. We have targets just like the Fed in the U.S. does. We're going to raise rates again, and that's going to further impact probably what's been impacting the Canadian market, why the Canadian market's been pulling back a little bit more on those expectations. But nonetheless, it's really expensive here in Canada, and I'm kind of playing this game of, do I want to leave my money in the market not knowing what the future looks like, but having to rely on this if I want to buy a property, or do I sell some of it off, put it all into cash, high interest, make 5% on some GICs or something over the next year, and then use that? Well, I'm trying to take the best of both worlds here, because I don't think I'm going to sell off the entire portfolio. It would be very tax inefficient to pull it all out of my corporation. My RRSP, I think the RRSP only allows you to withdraw $35,000 for a house purchase, at which you have to pay it back over 15 years. Yet I have like $60,000 in there, so if I pull out the rest of it, it'll be taxed super inefficiently. So there's going to be some money I'm not going to have full access to that would be intelligent, in my opinion. But I am going to look forward to scaling a lot of this down in the future. But while I sit here, I'm still collecting $1,000 a month. On days like today when the market rallies, I'm making good money at my job. It's really going to compound a lot quicker, right? So that's kind of where I'm at. But let's take a look at the individual investments, and then we'll take a look at real estate, my plan as a 30-year-old trying to get the hell out of his parents' basements with my fiance. But nonetheless, first and foremost, if you do like these portfolio trackers, you want to support the channel, go to portfoliospreadsheet.com. You buy one, you get one for each platform. I also sell separately personal finance trackers if you want to track your financial independence, perhaps one day retire early. I think it's always good to project your finances out and pay attention to your expenditures. It's what I do. You can buy one of each and have my full suite for no monthly subscription, which is absolutely incredible. But firstly, the Canadian markets, it's nice to see the bounce today. I mean, it was up 2.2%, which is astounding. VDY usually doesn't trade in that much, which was really nice on a single day, seeing a bit of a rebound because, again, things have been selling off a lot. From tops to bottoms, though, still, if we zoom way out here, we're down, I think, from the peak of VDY is about 13%, which really isn't that bad, again, because you're collecting such a fat dividend yield. And this is all related to pretty much the bank sell-off here in Canada. Banks have been actually making record revenues, a lot of them, but because of loan loss provisions, all that stuff, which is why I'm saying if you can just sit on the banks, if you're buying them now, I really still think, oh my God, cost average into those suckers, give it a year or two. I still have a lot of faith, right? Compared to things like VOO. VOO has been my gem right now because that's where my returns have been coming from. VOO just continually hits new highs, which is nice. I mean, we're not talking about Apple, which just peaked its all-time high, by the way. It's kind of astounding to consider in a market like this, but at least VOO is only down about 9.9%. And again, I bought so much of it in the October lows that all my S&P 500 positions are in the green, which is wonderful. Against some of them, however, like SCHD, probably the most hated dividend index now, it's like, when something doesn't start performing with the market, people freak out. And SCHD, I still think a lot of people have changed their opinions on it, which I don't really understand why, because a lot of the regional banks they own, which is still only like 15% of the entire sector exposure. But you're looking at people like, I think, Michael Burry, some of the people from the Big Short, instead of shorting banks or buying banks. You look at the top holdings now, like Pepsi. Now, I still think there's some concern with companies like Home Depot because obviously in a slowing real estate environment, some of those companies in there might not perform as well. But I just find the bearishness on it is absolutely hilarious. If you're looking for income and that's what you're relying on, or you just want it, these things they're not in a bad place to be buying them, in my opinion. And again, come back to me, quote me on that, mark this video. Come back to me in 1 to 5 years, and if VDY is at an all-time low or it's back to its pandemic lows, you can say, hey, I told you so. But I'm just a clown, just like many of us clowns on the internet that are making bold, nefarious predictions. And I should point out that meet Kevin here. I find this just so damn intriguing. And I think it's a precedent, not a good one. I've seen a lot of YouTubers, and I don't like Meet Kevin. I make fun of Meet Kevin all the time. I think the guy's as much of a clown as I am, but a lot of people are saying good for him. He should be paying this lawsuit. For those of you that don't know, Meet Kevin, Graham Stephan, Jeremy from Financial Education, there's a list of YouTubers that were promoting FTX really heavily. And and they're getting sued. A lot of people are going after them, all these lawyers saying that, hey, you guys should pay up. And I'm just going to read you one anecdote here, because CoffeeZilla did a whole video on this, and he reached out and he says, I reached out to all these influencers involved. So far, only Meet Kevin has replied, and he said he'd be willing to look into paying back some of the money as a charity, but says he's not responsible for your losses. Now, what's really scary here is he signed a letter of intent. He hasn't said how much. Nothing's really been finalized yet. And in a recent video, Meet Kevin was sitting in his jet, saying that, hey, like, I'm looking for an attorney. I need an attorney on my team. Not really explaining why, but we can kind of presume that it's based around these lawsuits, right? And I think he just doesn't want to spend all that money in court. I think he just wants to bury it, be done with it, not waste tons of money going to court and fighting it. And I think, honestly, that's a bad decision for the broader finance YouTube community. I mean, that basically just sets a precedent that anybody that says anything about a company, a crypto, or anything on the financial space of influencing on social media can get sued. And these lawyers are going to realize it'll work, and you're just going to see a cascade of lawsuits on people that are losing money because of promotions. This is why, like, when I talk about things, especially when I talk to individual people, I always blatantly point this out, like, way worse than I do on my YouTube. But when people ask me for financial advice, I'll tell them what I think they should do. And then, like, there's another YouTuber named Caleb Hammer, and he always says it when I offer, like, financial advice, it's not financial advice. Like, I just don't get it. It's like, I want to talk about this stuff freely and openly, and I want to give people advice or try and direct them, but I'm always reminding them, take other opinions, go talk to a financial advisor. Don't use this as an end-all be-all. It's not a one-size-fits-all shoe. This is what I do. This is how I would do it. Take it into consideration with your personal circumstance and figure out what's going to work best for you. It's like a mathematical equation that is literally different for every single person. So when I'm sitting here and I'm, say, promoting FTX, which thank God I didn't do, I didn't BlockFi all these crypto companies. I just avoided like the plague. Thank God, outside of ShakePay and a few others, just to get free crypto. I never promoted anything that didn't give you anything for free. Like, that's all I promoted was free stuff. I'm like, you don't need to buy this stuff. We all lost money on it. Kevin probably lost a crap ton of money in FTX. And even Kevin O'Leary probably lost a decent, like, everyone had lost money on crypto. Because I talked about it open and freely in a public forum, that now all of a sudden, like, I can just get sued for it, right? I think it's a scary line for anybody. I mean, literally anybody. And I'm just saying this as a fellow influencer, as somebody that does sponsorships on this channel, talk about companies all the time. I buy some of the companies that sponsor me. Some of them sponsor me. I don't buy them. I'm just here to offer coverage, right? Like, these CEOs, I love rubbing shoulders with people that are running $100 million plus market cap companies. And incredibly enough, that's where I made the vast majority of my returns, was buying small cap companies that were spreading influence across the influencer space. And I still own some of them, right? I have private placements in companies that are coming public, like, that I want to talk about, that I'll probably work with from a sponsorship standpoint. And I just don't want to be in a place where I feel like I should get sued if it doesn't work out. Like, if those companies aren't for you, don't watch those videos. So I feel bad for Meet Kevin on this aspect. I think it's one of the most damaging things he's probably going to do to the community if he settles that lawsuit, and it just sets a horrible precedent. Again, folks, I'm a clown. I am a literal clown. Meet Kevin is a literal clown. Don't take our financial advice. This is for entertainment value and documenting my personal journey, in my humble opinion. And yes, I do like working with companies. It's how I continue to do these videos. And some of them might do poorly. Some of them are going to do amazingly. That's for you to judge, or you don't have to judge them at all. You can just keep buying index funds, folks. But shifting focus a little bit into my long-term goals, I want to buy real estate, folks. I'm plagued with this decision as a 30-year-old living, bouncing between his parents' basements with my fiance, that, yeah, we want to move out. How do we want to move out? Well, we have one of two directions here. As mentioned, we thought about moving to a cheaper place of living, which is what I think most people should do. I mean, we were thinking about moving to Alberta, where we could pretty much semi-retire with the money we have. We could buy a place for $200,000 or $300,000 that would be comfortable for two of us, or we could even buy something a little more comfortable if we want to have kids for under $500,000. Still have tons of cash left over that would cover most of our expenses. We'd be great. However, it's a mathematical problem, because there's a lot more things that come into life than just saying it's as clean cut and dry as that. And we have family, and we do a lot on weekends with our family, even during the week. And we're like, are we willing to give this up to have a more financially free life? And at this current point in my life, that answer is no, because I think family matters more than money. And honestly, it's not that we're like losing this money because it's just going into a piece of real estate anyways, and we still work. We're still young. I'm only 31 years old. I have a long projected life. So to be in the position I'm in with my fiance and the money we have to do what we're doing, I think it's appropriate for us to probably buy maybe a 2-bed, 2-bath condo somewhere in the area, anywhere from $700,000-800,000 at most, right? And that would be comfortable living for us. That would be affordable. How are we going to do this? Well, as mentioned, and as a lot of you commented on my video, I think it would be prudent to sell off a vast majority of our investments. And the reason I say that is because not only is real estate correcting a bit, and I think it's going to correct worse if interest rates keep going up because of this. I mean, if you bought a $700,000 condo with $200,000 down, which I doubt most people even have $200,000 to do it, you now have a $500,000 mortgage with interest and principal on a 25-year, 3-year fixed rate of 5.59%. You're talking about $3,000 in monthly payments. So you're stuck with this dilemma, right? You can rent for $3,000 a month, or you could own a place for $3,000 a month. But here's the difference. This is a mortgage payment. This isn't talking about HOA fees, which would probably be $300 to $500 a month. You know, you're not talking about anything when it comes to property taxes or insurance. You're really paying closer probably to about $3,500, $4,000 a month. So in that position, even with $200,000 down in this current market environment, you're better off renting, because when you rent, you're not paying HOA, you're not paying insurance, you're not paying property tax. So it's not even worth buying a property right now with $200,000. It's just not. It's just so stupid and unfeasible for most people. I just rent. Because again, if you have the kind of money that you put it in the market, like again, we're very fortunate to be in the position we're in, but the way we look at it from my position is we have enough money to pretty much pay off the property. So if we put it in the market and we make 10%, you know, that could make us anywhere from what, 50 to 80 grand a year. That would easily cover most of the rent and everything like that, but we're not going to draw against it or try not to. But that would be the position we're in. So we're going to either pay the insane amount a month, but again, have that money coming in from a stock portfolio, but most of it's just going to be trying to supplement your income if you need it, which, let's be real, you know, paying $3,000 a month for rent for what we'd be looking is a lot. I mean, you're paying damn near $40,000 a year just to live somewhere. So in our position, we figure, hey, if we can pay most of that off, maybe take out a $100,000 mortgage at most, I figure that'd be the brink that we'd probably need to borrow. Our payments are anywhere from $500 to $700 a month. And obviously we'd want to pay that off quicker. I mean, we put ourselves in a much more comfortable position. Our total monthly expenses on a property would be under a couple grand a month easily, and we'd be in a good position, right? So we figure that if we do that, yeah, we're going to be giving up all that potential in the market. But now the thing is hey, with all that extra money, what are we buying? Well, we could buy furniture. Hey, we could rebuild our stock portfolio. We're not giving all our money to the bank. I think one of the biggest fallacies to investing in real estate is that if it's not rental property and you're mortgaging the crap out of it, people always say, oh, my property made so much money over the last 10 years, but how much did you pay to the bank in interest? Like if you add up your interest payments, if you're especially in this current market environment, there's no return, because all your earned income, all that lost value of your money just goes to the bank. So you got to kind of write that off against your property return, right? If you paid $100,000 to the bank and your property went up $100,000, did you really make any money buying your property? Probably not, right? So we're in this position where we're definitely probably going to sell off the vast majority, not all of it, but the vast majority of it at some point to, you know, get ourselves in a comfortable living position, which again, we're grateful to be able to do so. And I don't think there's a better way out of it, because it's such a tough debate. Honestly, I've been having this conversation with a lot of people, and at this point, I'd love to know what you're doing and everything you think about what I'm talking about here. It's a weird world we live in these days, folks. And yeah, anyways, enjoy your weekend.